In this video, we're going to talk about the world of SPY options. And we're going to explore how this liquid market mirrors S&P 500 and offers traders like you a unique opportunity. So for those that are unfamiliar, the SPY options provides a gateway to the broad US market. So this means less time sifting through individual companies, more time analyzing trends and price. Now, one of the standout features of SPY options is their flexibility, because there's multiple expiration dates each week. So each week you can capitalize on both short-term price movements and the longer-term trend. But how do you strategize this? First, of course, you got to gauge the direction of the market. Is it leaning towards the bull side, the bear side? So this is going to influence your options price and your trading approach. Like timing, as they always say in trading, is everything. SPY options, they do have a specific trading window. It operates between 9:15 and 4:15 Eastern time. So why is it important to know this? Because during those hours, the market's liquidity is at its peak, meaning there are more traders buying and selling. This heightened activity leads to more opportunities, but it also can bring about increased volatility. Now, early in that session, we can see a rush of trading activity as market participants react to the overnight news and orders, while the closing hours can be equally as hectic because traders are squaring off their positions. So you got to be aware of these nuances and understand the entire rhythm of the trading day. And that can often be the difference between a successful trade and a missed opportunity. You don't want to be trading during lunch hours. So it's not about just when you trade, but also understanding how the market behaves during those hours. Touch on the Greeks here, and these are metrics that helps a trader understand options price movements. Delta gauges price changes in relation to the underlying asset. Theta measures the options time decay, and Vega assesses its sensitivity to volatility. So let's dive into the concept of volatility. In the world of trading, volatility is like a two-sided coin. On one side, heightened volatility can drive up prices. It's going to reflect the market's uncertainty and the premium that's going to be placed on these opportunities. On the flip side of that, when volatility is low and the market is a little bit more predictable, option prices tend to decrease. So let's talk about SPY options in general, generating a consistent income. Now, SPY options do offer a range of strategies that can provide you with a steady stream of income, and it's the income that comes through premium. So let's break these down. First up, covered calls. This is just holding long SPY shares at the same time selling call options on those. So the benefit is that you earn income from the premiums of the sold call options. It's pretty simple, but there's a catch. The risk does lie in potentially missing out on further gains if the SPY price surges and those call options get exercised on you. Next up, you got a cash secured put. And this is where you sell put options, but you have cash set aside to potentially purchase SPY shares. The income comes from the premiums of the sold put option. The risk, well, you could end up having to buy shares at the strike price if the option is exercised. And then we have credit spreads, iron condors, and with credit spreads, you're selling one option, buying another with a different strike price. Credit spreads are one of the favorite strategies here at NetPicks. Now, the income is derived from the difference in premiums between the options, the one you bought and the one you sold. Iron condors, selling both call and put spreads at the same time, earning income from the combined premiums. Now, both of these have limited risks tied to the width of the spread. You always want to factor in elements like time decay and market volatility in your decisions. And in trading, discipline's key. You got to keep emotions at bay. You got to adhere to your established strategy. Choosing the right option, that's an art. And so it's not just about high returns, but you got to understand the interplay of market volatility, time decay, liquidity. Here's a tip for you. Look for options with a tight bid-ask spread, high open interest. There's a guide that's going to be linked below that you can check out. It's a free download about options. And if you're looking for consistent income, SPY options, they do have a lot to offer, from covered calls that we talked about to cash secured puts. Now, these are strategies that can bring in a steady flow of premium income. But again, with all trades, you got to be aware of the pitfalls of time decay, market volatility. Major economic events can absolutely introduce unexpected volatility to options. So be proactive, and you got to stay informed about what's going on out in the world, and that can make all the difference. And you know what? Use financial news outlets, economic calendars, even online forums if you want to stay updated on what's going on out there. Because the more informed you are, the better your decisions can be. Anyways, this is just touching on this. Again, there's a free guide that you can download. And in the world of SPY options, yeah, it's challenging, but it's rewarding. And with that right knowledge and the strategies, there's a lot of potential there for you. Anyways, thanks for watching. Hit like, hit subscribe. We'll talk to you soon.